All right, hello everyone. This is Seewing Yee from the Yee Real Estate Network, and thank you for attending this short, hopefully 30-minute webinar. And what I have in front of me is our affiliate partner, Buffalo Turnkey in Buffalo, New York. And today's presentation will be Mr. Caleb Kanazi. He's one of the principals of our affiliate partner. So today we can talk about it's sort of a Q&A, a very high level presentation. So with that said, before Caleb comes on, yeah, so let's take a step back. We've been working with the Buffalo Turnkey for since last year, and it appears a number of our investors have pulled the trigger in the Buffalo turnkey properties, and the momentum is building. We have many investors uh, uh, systematically are looking into this market. Many of them have already purchased properties in Buffalo, Niagara Falls, and many of the investors have exceeded the expectation with respect to Buffalo turnkey. And suffice to say, your products, Caleb, is one of the highest, if not the highest, cash flow properties in the country of the turnkey system, providing system. So we appreciate working with you guys. We can have a very good long-term relationship. So now is the opportunity for for me to interview Caleb and just to ask you a few questions. And so our investors can have a feel for how you guys work, your process, your procedure. So before Caleb begins, typically, I send out the email blast, typically at the beginning of the month, maybe one more time, maybe twice per month with a new inventory. And then I work with my investors. I guide them along. I identify which of my investors are serious, and if they are serious, they get loan pre-approval with our preferred lender, Richard Advani from Wells Fargo. Once they get pre-approval, they work with me, yeah, and then I help them as much as I could. Then when they're ready, then they will. I will have them call you, Caleb. And when my investors talk with you, they on a phone appointment, then you will take your time to identify our investors' goals and objectives. What is their criteria, and then based on this inventory worksheet that we have in front of us, you will help my investors to buy a particular property from this inventory spreadsheet, and then Caleb will provide the necessary pictures of the property, the interior and exterior of the particular property, and then Caleb will walk our investors from beginning to the end. So you're and then yeah, then you send the contract. You do all the work. You do a lot of work, my friend. I don't know how you find the time to do it. You guys are so busy. But anyway, without said and done, yeah. So before Caleb will go over this inventory spreadsheet. This is a May 2019 inventory spreadsheet for Buffalo Niagara Falls. Before we go over the details of this spreadsheet, Caleb, can you share with our investment group from your perspective, what is your role? What is your responsibility with respect to your company? And then my second question is uh, uh, how we help our investors to pull the trigger and have a successful experience buying properties through your market.
Sure. So I mean, I my role is kind of broad, and I wear a bunch of hats for what I do exactly. But I could help your investors do basically uh, define properties, what they're looking for. They can tell me what areas they're looking for, what price ranges, and what conditions they're looking for, and I can help identify which properties are best fit for them. And then if they want to come into Buffalo, I can take them around, drive them around, kind of show them the areas, the neighborhoods. And that's mostly what I do with your clients, at least, and discuss with them for that. Your second question was how to help investors. Was that? Is that correct?
Yeah, I mean, yeah,
Okay, well, I mean, I could just help them with any questions that they have. A lot of people have questions in buying properties, and I just answer them to the best of my ability, or find out the answers and get back to them as soon as possible. I can try to supply them with photos, any extra information they're looking for, um, just broad range things like that.
Yeah, great, Caleb. Caleb, let me ask you this. Now, your spreadsheet of Buffalo properties, you have quite a few each month, and not only Buffalo but Niagara Falls. Initially, when our investors look at that spreadsheet, when they review it, it's very daunting. Meaning, it's very overwhelming. It's not too
Right,
often. It's not too
right,
often you have so many listings available, which is good in a lot of ways, but they get overwhelmed, and many of our investors are sort of newbies, and for whatever reason, when I put them in touch with you initially, you seem to find a way to able to help them identify their criteria and pick the right properties from this spreadsheet. So what are some of the typical questions you get when you initially consult with my investors before you narrow down and help them pick the property from this spreadsheet? What's some of the that comes to mind? What some of the
yeah. So generally, what they'll ask, well, tell me essentially of what they're looking for. I'll ask them what they're looking for. They'll say maybe a certain price range, and I'll tell them what kind of cash flow they can expect in that kind of price range, or if they're looking for doubles and singles, that's generally going to vary. And that I'm basically just ask them what they are looking for, and then try to find the best properties that we have to fit their criteria. They'll look at I'll just suggest maybe a list of properties depending on how many they're planning to purchase, and then they could select a few that they like the most. I could get them photos, kind of tell them the condition, and just try to help them find the right house for them.
Yeah, good for you, Caleb. Yeah. Let's go over the spreadsheet. Sometimes, my some of my investors, they ask me, what does DBL mean? I know what it is, of course, but yeah, I want you to tell the audience what's the category on column E. What's DBL mean, and what's SGL means, and also on column D. They need some further clarification. Status. Column D is ready, contract, reserve, and future. Can you briefly go over these two
Yeah,
scenario?
absolutely. Yeah, so the type is the DBL. That's just short for a double. It means it's a duplex. There are two units in one house. Single is just SGL is just for single, so it's a single family house. Just one tenant will be living there, and then it'll also sometimes say if it's a triplex, like a 3 unit, 4 unit, 5 unit. We get those every once in a while, but mostly we're dealing with doubles and singles, as they're more common in the areas that we purchase properties and investment areas. And then for the status column, the ready, that means that the property is rented and ready for sale. It doesn't necessarily mean that the property has been rehabbed. We don't rehab all the properties, since sometimes when we purchase properties, there are already tenants in place, and we don't necessarily kick them out just to rehab the property and tenant it. So the price for those properties is going to be less. I know the price kind of reflects the condition a little bit, and we can kind of help your clients out and tell them what condition is what property. And that's how I kind of understand why the list can be a little daunting, is because you don't know all the little details about the properties. But I mean, if they come to us and ask questions, we're certainly here to help. So that's basically ready, just means rented almost, and just ready for sale. That's our final price, non-negotiable. Contract means that we already have it under contract with a client of ours or yours. So it's no longer available, but sometimes those might fall through. That's why we still keep them on the list just in case, but it's kind of rare that that happens. But we use this list additionally just to keep track of our properties. So that's why they're kind of still on the list. And then future means that we're rehabbing this property. And when we're rehabbing it, it might be on there a while, and the prices and rent amounts are just estimated. So the price is subject to change, and the rent is subject to change because we haven't rented these properties yet. Then we would change it to the ready status if they were rented. just right now they're under construction essentially. And then for the reserved, that means that they are future, but we are reserving them for someone who thinks they're going to buy the property, but obviously we're not done with the property yet, so they might want to wait for photos and for finalized price and rent amounts. And once that's done, the person who has reserved the property kind of gets first crack at the property, saying if they want it still or not. And if they want it, then it's going to go directly under contract. And if not, we'll just change the status as ready. And that's pretty much all the statuses.
Yeah. Okay. Yeah, that's pretty self-explanatory. On the right-hand side, under the comments, can you explain the homeowner sale aspect?
Right. So not all these properties are we selling to investors. And basically, when it says homeowner, your investors probably don't want to look at the property. Some people do. They're going to be in
We lost connection.
great areas generally, and they're going to, oh, we did?
Yeah, we lost connection a little bit. The reception's kind of off and on.
Okay.
Hello?
Can you hear me?
You just barely came back on, but hello?
Hello? Yes.
Yeah, okay, now you're on, but you were off for a while.
Okay.
Huh. What's wrong with the reception? Maybe you should.
Is it my reception or your reception?
I don't think it's mine. I'm not sure actually, but I close out all my programs, so I don't know.
Okay, because at least my network is saying that it has full bars.
Yeah, mine's okay too. So let's continue. Hopefully, we're not gonna have this static anymore. Hello?
Yeah, you can hear me?
Yeah, I can hear it now. Oh, jeez. Hello?
Yeah, I'm here. So,
Yeah. Okay. Try to continue because you're coming off and on the reception.
oh no. Okay. Do you just want me to continue
Yeah.
talking about the talking in general?
Yeah. Okay. Yeah. So my next question to you is, lately the Buffalo properties, the returns are a little bit lower, and there's a lot of homeowner sales. There are some opportunities, but I have to say, if you agree with me, that recently more than 80% of the properties that are purchased by my investors they purchased in Niagara Falls. Is that fairly correct?
I think that's pretty correct, and I think the reason is because buffalo prices have gone up quite a bit. So we have to raise our prices, obviously, to kind of account for that. And you can kind of get a better neighborhood and for lesser price in Niagara Falls right now, since
Right.
Niagara Falls isn't as hot as a market, and it's really only like 30 minutes away from Buffalo. So a lot of tenants who live in Niagara Falls will even just travel to Buffalo for their work. So yeah, I would say it's accurate that about 80% of the purchases from your clients are Niagara Falls.
Good. With that in mind, can you scroll down to the Niagara Falls inventory listing at the bottom
Yeah,
of the spreadsheet?
okay.
Yeah. So yeah. Okay. Most of my investors, correct me if I'm wrong, they purchase. Oh, there's a dog.
Yeah,
they,
that is unfortunately, sorry.
they buy a property like a duplex for 50,000, renting for $1,000 on both sides total. So that's sort of a criteria that most of our investors buy $50,000, maybe $55,000 in Niagara Falls, renting for 1,000 on both sides combined. That gives you like 15 to 19% return cap rate, which is amazing. Some of my investors, they purchase single family homes, which is a lot cheaper, like 45,000, 40,000, and for some great reasons, Richard Avani was able to get financing done on such a small purchase price. So
Yeah.
allowing our investors put down very low down payment. They can finance a property in Niagara Falls, getting them cap rate, I mean cash on cash return of like 30 to 40%, which is mind boggling.
Yeah. Yeah.
And the appraisal, which is very rare. Caleb, maybe you have some perspective. The other Midwest markets that's out there, they have a lot of high cash flow properties. Many cities, those have somewhat similar low prices, but the rent is not as good, and the cap rate is not as high. And but the worst of all, with the other Midwest markets, it's very difficult to get financing because the appraisal is broken. Maybe those other Midwest markets are have a lot of issues that prevent the appraiser from appraising correctly to do the financing. But
Right.
why Buffalo, our investors for the most part are able to get appraisal correctly done, whereby they can get financing on cheap properties, such as your Niagara Falls property, $40,000 to $50,000, and still get financing. Tell me what makes your market so unique. The appraisal is consistent, and the financing can be done, allowing our investors to leverage the money in a very high rate of return. So
Right. So I don't know who you're exactly comparing us to, but yeah, a lot of people, uh, we're basically selling them at the right prices. We're not overcharging people. I know a lot of investment companies do. I mean, you hear some horror stories about how people get ripped off by some of those invest. I mean, I don't mean everyone is, but that might be part of the problem. But I mean, essentially, we're selling them at good prices. These are very fair market prices, and we're giving. I think that's the reason why that the appraisals are pretty good. So every once in a while, you'll get an appraiser who doesn't. I would say doesn't know the market as well as we do, because I mean we're doing this all the time. But for the most part, we're going to have those. I mean, you get 12 different appraisals, and you're going to get 13 different opinions. Is one of the realtor jokes over here. But yeah.
yeah, so that's good. That's good. I'm glad to hear that. So Caleb, can you let's go over one case study. Let's go over one property. Do you recall anyone this property? Oh, why don't we do this? One of my client closed escrow recently on item number 77, 1517 Niagara. Just
Oh, right.
just say his name is John. That's all we need to say at this time. So
Yeah.
can you go over this line item, the property that he purchased, item 771517 Niagara? Just go over the, like, for example, now with the purchase price 56,500, the rent was at 1,100, da da da, and the if
Yep.
you go to the right, and the total RI is a ridiculous 17.21%. Can you share us with the rest of the people listening what's so unique about this particular case uh, transaction?
Yeah, that was a very good property. I mean, that property was in a pretty good shape. It's double. That's why it kind of has a little bit higher return on investment. I believe each unit was rented for 550 each, and that's right in 1100. There's right on the sheet the purchase price 56.5. And there, when he did the inspection there were a few items that he wanted to have done. I mean, every inspector, just to justify his job, is basically going to want to find at least a few items, and there's always going to be a little minor things we missed, and we just corrected every single item that he found essentially and wanted us to correct for that one. So every once in a while we won't be able to, I mean, if they do find something that we can't correct cheaply, but we just, for the same price, we corrected every single item, and I mean, that's a good overall property. It was a good buy.
Yeah, so I assume the client is very happy with the
Yeah. He's, as far as I know, he's very happy. Yeah, and I mean, he's bought quite a few properties from us now too, actually.
Yeah, of course, yes, yeah. I'm working with him very closely, as I work very closely with many of my investors. As you can tell, Caleb, I'm very proactive, and I, I communicate with you quite a bit, Caleb, to
Yeah,
make sure. Because yeah, I mean, I have a vested interest in my investors to make sure that they have a good experience. That's why
yeah, yeah. It's very good.
I get involved, and don't try not to be a I know you're busy, but I mean, don't think I'm trying to bother you. But I want to make sure that
I understand. Yeah, that's good.
yeah,
So,
yeah. But you've been doing a
sure.
great job, Caleb. I don't know, you don't have to share the age of how old you are, but most of my investors think you're much older than you are because you've been doing so well communicating uh, from beginning to the end. So I really appreciate your
Right, yeah, I've been doing this from a young age. Yes,
yeah. I
my
know.
father. Well,
Exactly. I mean, you guys have a family business. So tell me, okay, let's address some of the concerns. Okay, some of the investors that have not purchased in Buffalo in Niagara Falls yet for whatever reason, uh, and of course they tell me some of their concerns. So hopefully you can address them.
yeah,
Let's go over the perceptions versus reality, right? Uh, the reality, it is what it is. I feel you guys have a amazing turnkey system. You guys been doing for so long, for so many years in your local market, so you know, guys, what you're doing. But for new investors, for my group or any investment group from out of state, they are very skeptical. One of the concerns they may have is, oh, they look at this property built 1920s, almost 100 years old. Their thinking is, if they buy this property, all the maintenance and upkeep and issues, the roof gonna need to be replaced in a few years, the boiler's gonna break down, the house is gonna crumble, they're gonna all this perception of this numeric cash flow looks good at the beginning, but they're thinking over time they're gonna spend so much money addressing the vacancy issues and the additional rehabs issues that all their returns will be would be offset by this massive amount of repairs down the road. Can you help adjust the perception that some people have about your market, your properties?
yeah. So I mean, they are correct that I mean these are older properties, but I mean they built them extremely well back in the day. I mean, some of them might be 100 years old, but I mean they're completely sound and standing, and your investors are obviously free to get an proper inspection, and these properties they're not going anywhere essentially. As for the concerns that there's going to be some maintenance, yes, there's going to be some maintenance. They are older houses, but the major items, the big ticket items, should be already taken care of. And we'll let you know essentially if they're not. A lot of times we're replacing roofs so that you're going to have brand new roofs. Not for every property, and just kind of speaking in general. So if they want to ask about a specific property, I mean, we're very candid and very honest with people, and we'll tell you exactly what is going on with the property, why it's that price, etc. But we're replacing roofs, boilers, and when your clients, if they come to us and they see a price on the sheet, say it's 50,000, and it's ready, so we don't plan to do anything else on it, and the furnace is old or something, we'll say, well, we'll replace the furnace for you. We'll just add $1,000 to the price because we could do furnaces, hot water tanks. We could do all the rehabs a lot cheaper than anyone else can do it, and that's a lot of where we make our money. Obviously, is being able to rehab a lot cheaper than anyone else. For that, and then what were their other concerns again? I'm sorry.
Yeah, that's pretty much it. I mean, so what I hear saying is, when an investor buy one of your properties, the roof has been replaced short while ago. The electrical system has been upgraded. The boiler and all the major items has been rehab, and the expectation moving forward is that uh, for for a long time you're not going to have investors not going to have to incur any major expenses associated with these major items. The expectation in moving forward in the next 5 to 10 years, maybe some cosmetic repairs needs to be done Is that what I hear?
So it depends on the property essentially, but yeah, if the roof is going to go in about 5 years by our estimations, I mean it's all a little bit estimate and subjective, but yeah. So if the roof is going to go, we're going to replace it. If the furnace we think is going to go, or even has rust on it and looks older, we're just going to replace it. And the same with the hot water tank. Electric, we're almost always upgrading them if they have fuses to circuit breakers. They're not always like super over 100 amps, but we make sure at least that they're at least 100 amp services pretty much. And then, so it kind of will vary on the property on what the condition of the mechanicals are. But a lot of times, yeah, you're going to have just brand new roof, brand new furnaces, brand new hot water tanks. And we can always do that work if that is a concern of theirs. And we can just add it to the property. It's not a big deal for us, essentially.
That's good. So yeah, again, what I hear you saying is that long term, this property gonna last for a long, long time to come. That's the value that you guys provide in your market for out of state investors, right? Yeah.
Yeah, they should. Yes.
Yeah. Okay. Okay. So we only let's spend 10 more minutes and that's it. I really appreciate your time, Caleb. You are very very busy, doing so much work every day, especially for my investors, and I value your effort. So a couple more questions. So in terms of rental market, I mean, the tenants that you've been getting, I mean, are they good long-term tenants based on your experience? I mean, what's the expectation for the next 5 to 10 years in terms of the changeover of tenants, in terms of the quality of the tenants that are renting these kind of properties, and look at and share with us the overall rental market for the foreseeable future. I know nobody have a crystal ball, but you and your father been in your
Yeah.
market for so long. But go ahead.
Yeah, so it's going to vary a lot by the property, obviously, but some of these tenants, we've had tenants that have been with us for like 25 plus years, and then other tenants, unfortunately, they'll move out as sooner than that, since we always try to get the best tenants, the best quality tenants, and we're pretty good at it at this point, and we have a very, very strong rental market here in Buffalo and in Niagara Falls. It's just it's not like other areas like Syracuse or Cleveland where they struggle getting a tenant in the place. No, we're basically, if the property is vacant, say today, and then we're put it on the market to rent, we'll have it rented for June 1st, essentially. It's very quick rental market. We'll have tons of applicants a lot of times for these Buffalo properties. And for the quality of the tenant, I mean, when we're looking at the tenants, we're looking into their background, we're checking their social media even. We use a website called Ben Verified. We pay some money per lookup for the tenant. We get them to sign off to make sure we can do a background check that criminal history, make sure they've never been evicted. That's a big point item for when we rent properties. But the one thing we're not generally checking is like credit, because a lot of times, I mean, if you have good credit, you're not going to be renting generally. I mean, why would you rent one of these properties if you could just buy them, essentially? So a lot of times they're going to be lower income individuals, but that doesn't necessarily mean that they're not going to be good renters. So it kind of, we always try to just get the best tenant possible, essentially.
Yeah. Well, Caleb, so far you guys been doing a real good job with our investors. So a couple more questions. Now, look at the big picture. So how long you guys been around? And of course, your father, Keith, is the founder of your organization. So tell me
Yeah.
about that.
So he's been doing this for 25 or 30 years. He hasn't been this big. He hasn't had all these properties this entire time. He kind of started off small and still used it as like a secondary income almost when he first started, like 30 years ago or so. Yeah, so he has a ton of experience in the real estate market. We've been doing kind of this volume and have Buffalo Turnkey Properties. You could look at us up. We've been in business 15 years with Buffalo Turnkey Properties. And if you look us up on the reviews and everything, I mean, there's basically nothing bad written about us. And I'm sure your clients are doing their due diligence. But when you look at other a lot of other turnkey investment groups, they'll have like these like really bad things written about them oftentimes, or they'll only be in business a couple of years and they make their money and then they're gone. We want a lasting relationship with clients, so we try to take care of clients, and because we're not going to. I'm younger, so I plan to be in business a long time. So you don't have to worry about us being here one day and gone the next.
Yeah, you're right. You're right. The other so-called turnkey providers in other markets. Yeah, you're right. All the things you said is true. They are very very risky. They have not done their job in many ways. But yeah, that's been my experience. My experience working with you guys has been very very positive so far. So I presume since you're very young, you're gonna inherit the family business for decades to come. So this is my presumption, and you
Yeah,
can.
well, I don't know if you're aware, but I have a few brothers and sisters and brother-in-law and everything, and we're all in the business essentially. They do different aspects of the job. Like one of my brothers does more of the accounting end of real estate, but we have it's a it's a big family business. Like we're uh, in the family, so and
That's
we all
yeah.
continue in real estate.
Yeah, that's very reassuring to hear. Yes, I am very much aware that you guys have many siblings and even sister-in-laws that are I mean running part of the business as a family-owned business generationally wise. So Keith has done a good job to mentor you guys, your young
Yeah,
to
and
carry
he's
on.
still in. He plans to do this for a while, a long time, as far as I know, too. So we're
Yeah,
here.
of course, yeah, as long as you keep on exceeding our clients' expectation, more and more of our investors gonna buy properties from you, and I'm more motivated to send more to you. And in fact, each of our investors have purchased multiple properties from you at a time, so tells you that we have a very good working relationship. So I think that's it. I think we are spoken for almost 40 minutes now. So uh,
Okay.
we should be done. So we can do some future webinars together. We can talk about other aspects of your market. But for right now, this is good enough. I really appreciate your time, Caleb Kanazi, to share, to present and give us some more perspective, especially for our other investors that are for one reason or another they have a lot of concerns, and some of your answers have addressed most of their concerns. I hope, but I'm very confident. Otherwise, I would not continue to feed you consistent investors to your market. So Caleb, appreciate that so much, and continue to do a good job, help our clients, and follow through with them, communicate with them, follow up,
Yeah.
address their needs, concerns. So thank you so much, Caleb Kanazi and the Buffalo Turnkey System. And we have no other further question, Caleb. I'll let you go, and so you can continue to help our clients. Okay.
Sounds good. Thanks very much for viewing.
Thank you so much, Caleb. Have a nice day.
You too. Bye bye.
Okay. Goodbye.
Very nice.